Welcome to TheAccountSolutions. This channel is dedicated to bring you solutions to your everyday tasks in areas of bookkeeping, business administration, accounting, and taxation. If you like what you are doing here, kindly click on the subscription button and support us. Enjoy the rest of this tutorial.
Do you know? Do you know?
Hello everyone, good evening. I hope you had a wonderful day at work today. Welcome to another edition of Do You Know? Today I'll be discussing on debtors confirmation or trade receivables confirmation or account receivables confirmation or debtors circularization, whatever name you choose to call it. Now this is where the external auditor of a company gets direct confirmation from the debtors of the company with respect to the balances in the trade debtors account. So I'll explain in simple terms. I am the auditor of Mr. A. I've gone in with my team to carry out the audit on Mr. A's books of account. Now I'm trying to review the debtors balances. So I've seen the balances of the debtors and I've obtained a schedule of the list of all the debtors. So if the balances, total balances in debtors account is, let's say, 25 million naira, I've gotten a schedule of the list of all the debtors that make up that amount. Now I want to obtain a third-party evidence from the debtors directly. I want them to confirm these balances if they are correct or not. Sometimes the balances in my client's account may not be correct. So to get reasonable assurance, I need to confirm these balances directly from my client's debtors. This is what we'll call debtors circularization. So there are two methods that the auditors can use to circularize debtors. Now mind you, the auditor will not write the letter to the debtor directly. He will write the letter through the client. So Mr. A is my client. I am carrying out an audit in Mr. A's account. Mr. A will write the letter. I'm in charge of the process. I control the process. However, Mr. A, my client, will now prepare this letter in their letterhead and send to all their debtors. This is how it is done. Then the debtors will now write directly to the auditors. They will not write back to Mr. A with the confirmation. They will write to me, to my firm, to the audit firm I'm working for, confirming those balances. So there are two methods of carrying out this confirmation. The first one is the positive confirmation, and the second one is negative confirmation. I'll explain. Now the positive confirmation is where the debtor or debtors receive a letter from my client requesting that they confirm the balances in that letter. So my client will state the balance that the debtor is owing them in the letter, or attach the account statement or the ledger, attach it to the letter and send to the debtor. So the debtor is to confirm if that balance is correct or not. That is positive confirmation. Now this type of confirmation may come in two forms. One, my client Mr. A may write to the debtor stating the amount that they think, or from their books, the amount that the debtor is owing them, let's say 1 million naira. Mr. A, my client, will write that amount in the letter or attach an account statement of you, who is their debtor. The account statement will have the balance of that 1 million in it and all the transactions for the period of time. And you are to confirm if the balances in that letter or account statement is correct or not. That is the first way of carrying out a positive confirmation. Another way is to leave the letter blank, simply saying write to our auditors and state the amount you are owing us. So Mr. A is writing the letter to the customers asking them to confirm directly to the auditors how much they are owing Mr. A. So Mr. A will not state any amount in the letter, will not attach any statement. It is an open confirmation. The first one, where they wrote the amount you are owing them, is known as a closed positive confirmation, while the other one, where they write to you to confirm the balances you are owing them, is open. You are to fill in the blanks. How much are you owing this company? So you write directly to the auditors confirming their balances. Second one is negative confirmation. The client will write to the debtor, stating the amount they are owing them, or attaching the account statement. The debtor is to confirm to the auditors only when the amount stated in the letter is incorrect. So if the amount in the letter is correct with their own books, then there is no need to confirm to the auditors. But if the amount Mr. A has stated in the letter is not correct, then the debtor is to write to the auditor that this figure is not correct. So these are two methods how the auditors can carry out debtors circularization or debtors confirmation to confirm the accuracy of the balances in the trade debtors of their client. Positive and negative confirmation. Positive confirmations provides more audit assurance than the negative confirmations. Thank you for watching today. Hope you got one or two tips from this Do You Know section. Thank you, and hope to see you again next time. If you're here to subscribe to this channel, kindly subscribe and support what we do here. Click on the bell so that you can be notified when we release new videos on this section. Thank you, and have a wonderful evening.
Do you know? Do